Thank you, Omar. Thank you, Taj. Appreciate it. So I won't keep you guys too long here today, but it's so important as a trader to not only know what you're looking for in terms of technicalities, in terms of your system, your model, when the conditions are high probability and you should be getting involved, but the majority of your success, especially as you grow as a trader and just throughout your trading journey, I'm sure you guys have realized this by now, most of you. The majority of your success is going to come from not going on tilt, right? Not over trading, not breaking your rules, not over leveraging, not rushing into the market just for the sake of putting on a trade. Okay. If you guys were in the call we did this morning in Discord, some of the review from last week and then the quick weekly prep we did, but more so that first call we had this morning with the reflection from last week, we saw and discussed and completely dissected those charts. Okay. And it's so cool to see. It's so beautiful to see. It's so precise when you see those trades and that order flow and that price delivery play out. It's very, very fascinating. Okay. And we need to, be able to understand when those scenarios are going to play out, and we should expect great price delivery and we know what we're looking for, or B, sit on our hands and do nothing and remain patient. And the majority of the time, you need to do nothing. The majority of the time, you need to just say, okay, there's no clear draw on liquidity from here right now. There's no clear setup. I can argue the bullish bias. I can argue the bearish bias. I'm not going to do anything. Okay. So as your framework in your trading in general, but as you go through this week specifically, if you want this to be a beneficial, valuable trading week for you and you want to feel like you made progress when the market closes on Friday and you're reviewing your week on Saturday or Sunday, it comes from not impulsively trading, not getting in for the sake of getting in. Okay, so number one, it's easier said than done to say, okay, we all know over trading's bad or impulsive trading's bad or we shouldn't over leverage. But when you get in that moment and those candles are printing, it's very, very hard to not push the button when you're feeling tempted to for no reason, right? Not put on that extra 2 or 3 contracts, right? Just because the setup looks good or just because you're seeing volatility in the market. Okay. All those things are easier said than done in terms of avoiding them, but you need to remind yourselves in those moments, right? Every time you do that, even if you're to put an impulsive trade on, sometimes it's going to be a winner, but that's not a win in terms of your progress as a trader. That's a bad habit you're developing that's going to hold you back in the long run. That's going to come back to bite you. Okay. If you guys, I'm sure most of you, I see some of you guys in here, and a few of you guys are joining a little later. I hope everyone's doing well. And I see some familiar names, but if you guys haven't heard me speak before or weren't in the call this morning or haven't been in the recent Discord calls, I have a couple perspectives mentally that keep me out of trouble and put me in the right spot mentally, entering a trading week, entering a trading session while the trade is on, et cetera, right? I always tell my group and myself, my own personal trading, your trading career is not defined with one day. It's not defined with one trade. It's not defined with 1 week. Okay. And if you remind yourselves pre-market, pre-trade, right when you put a trade on, that often, and you build that as the framework of your trading mentality, you're not going to be so flustered after a loss. And by extension, you're going to be so less likely to go on tilt and freak out. Okay. So just understand and remind yourself every day this week, write it down while the market's printing, while you're watching candles waiting for a setup. Write it down. Say it to yourself. I know I feel like I need to get into a trade, but there's no setup, right? So if I don't take a trade today, the good thing is, you guaranteed yourself that you're not going to lose money. You're not going to damage your confidence as a trader and your skill set to read price. Okay. And you're implementing patience, and that's your strength as a trader. I was discussing it this morning as we were going through those charts. We can see such advanced signatures and, understand when a fair value gap should be a breakaway gap, or what order block should be high probability in terms of supporting price when we're bullish, right? Which fair value gap we want to see and expect to get inversed, et cetera, et cetera. Okay. And those are all extremely important in your skill set. Okay. But until those conditions come, you need to not do anything. And when you don't make those avoidable mistakes and put on trades and put on risk for no reason, you're going to improve and you're going to see progress. Okay. For those who were in the call this morning when we were going through those charts, we were on there for maybe, I don't know, I want to say around 90 minutes, right? And we were talking at length through some charts from last week. Okay. And every single one of those charts that we reviewed, I deemed a high probability setup, clean order flow, and scenarios that you want to be involved in. Okay. And every single one, besides one chart, was the 30-second execution, but every single one was on the 1 minute time frame where 95% of my trades are taken on. Okay. And I always mention this, even to myself, reminding myself, but majority of the time to my group while we're watching trades, when I'm giving my thoughts on what price is going to do, or if I'm reviewing a trade or, a fractal price in the market, I always say we can get very great setups, very clean ideas of what price is going to do and when on the 1 minute chart. But we need to know what we're looking for, which PD arrays are significant to us, which PD arrays are important, right? And more importantly, which ones are not important. Okay, because it's a fine line on that 1 minute time frame between just marking out every fair value gap that prints, every order block that prints, every time you see a breaker or a volume imbalance, all the PD arrays that we know and that we can just purely identify as a pattern. Okay, it's a starting point. But as you grow, those PD arrays are just means to get involved when it fits your narrative. And going back to what we said earlier, the number one thing is having a clear draw on liquidity. If you don't have that clear draw on liquidity, or there's equals or relative equals on both sides of a range, what do? You do nothing until one side is swept. And once one side is swept, the majority of the time, those are when you're going to get the best of the best setups, right? And you're being rewarded for that patience. Okay, I believe off the top of my head, one of the examples that we were referring to this morning and talking about was the 150 macro on NASDAQ on Thursday afternoon, Eastern time, of course, right? We had relative equal highs ahead of the macro, hint, hint, and then we had relative equal lows also ahead of the macro. In other words, liquidity on both sides. So that as a framework right there, you don't take a trade. And that's going to keep you out of a lot of trouble. Yes, sometimes when there's equals or relative equals above and below, the trade's going to work. But you want to take what? High quality, great setups, right? You want to feel confident when you actually build up the strength to push that button. You don't want to say, okay, I see an inversion, I'm just going to get in even though there's equal highs above on both NASDAQ and ES. And I can argue both scenarios, bullish and bearish. You don't want to have that be the case when you're trying to be a high probability, confident, consistent trader. Okay, so that as a general rule, if you have relative equal highs or relative equal lows below, depending on if you're looking for a short or a long, of course, just be detached from those setups, okay? And be glad and be, proud of yourself for having the patience to wait for a better setup. Something that I say often, and as of recent as well, more often than before, to my group is, you don't know what opportunity is going to come down the road, whether it's the next macro, whether it's the afternoon session, whether it's the next day, whether it's London, whenever, right? You don't want to just be taking trades for the sake of taking trades. Okay. You want it to be so clear to you, and you want to see time to align with price. So for those of you, I'm sure I'm looking at the names, the majority of you I recognize are probably familiar with the macro power of three and how I engage with price, right? The major advantage as an ICT trader is time. It is the major advantage on every time frame, but more specifically, you need to understand that if you're executing on the 1 minute time frame. That is the major advantage, right? Again, I'm not negating the importance of identifying liquidity or, a price pattern, a PD rate to get involved in. No. But you need to understand the significance of time. Okay, those macro windows, 9:50 to 10:10, 10:50 to 11:10, 11:50 to 12:10, so on and so forth. X50 to X10. What occurs in those macro windows are of higher significance than what occurs before and after those. Okay, so think about what we were discussing in this call, but really this morning as well in Discord when we were talking about that delivery that I just mentioned from Thursday's afternoon session. You were seeing liquidity built when? Ahead of the macro. And that's when you expect time distortion, chop, consolidation, unfavorable, stickier conditions, whatever you want to call it, right? You expect that type of delivery, especially when you see relative equal highs and relative equal lows below the current market price, right? And when that's occurring ahead of the macro, you're not saying, oh, this price action sucks. It stinks. I'm going to freak out and close the charts, right? Once you have those scenarios and you're looking at price that way and you understand the significance of time, you're saying, oh, this makes sense. We're not moving around cleanly ahead of the macro, and we have relative equal highs and relative equal lows on both sides. I'm not going to do anything here, but often once we enter those macro windows, that's when you're going to get the best of the best setups, because you're plain and simple going to see one side purged and then a reversal setup. And macro power of 3 is what? If we're looking for a short like we were Thursday afternoon. Okay, in the 1:50 p.m. macro, you guys should go look at this chart on the 1 minute time frame, NQZ 2024. Okay, you only need the 1 minute chart and time of day right now for this particular situation. And again, when I talk about this, I'm not negating the importance of top-down analysis or higher time frame levels by any means, but for the focus now, I want to focus on what I've been discussing, right? But if you look at that 150 macro, you're going to see that right at 150, price randomly, and I say that as a joke, goes above macro's opening price. So the opening price of the 150 p.m. 1 minute candle, it goes up and purges the engineered buy side liquidity that was built up before the 150 macro. Okay, that's what you want to see, and that's what you expect to see. Now, sometimes what will price do? It'll just continue to rip higher, right? So what does that mean? You still have to wait for confirmation of a reversal, or in other words, that's our macro power of 3 entry method with a high probability inversion, a macro inversion, a macro balanced price range, all the ways that we engage with price. Okay, we know which PD rates to look at, but you want to see that manipulation when you're bearish above macro's opening price. And then all you're waiting for, because the bodies tell the story, are those candles to close below a bullish inefficiency, because that's the signatures that, okay, we're not seeing continued bullish delivery, right? So if I recall again, if you're on that 1 minute time frame, and most of you I'm sure will look after this instead of just right now, but if you have it in front of you and you're on that 1 minute chart, you're going to see that swing high formed right at 150, and there's 2 or 3 little 1 minute BISIs or bullish fair value gaps right before we made that swing high, right? So you see that large down close candle right after we purge the highs above macro opening price, we zoom right down and close below those 2 fair value gaps that we discussed about this morning, the order block that should have, because we know which PD raise should support price if we're in a buy program and should act as resistance if we're in a sell program. We're displacing right through and below that high probability bullish order block. It's nested in one of those fair value gaps. Go look. Okay, in other words, you have so many reasons if we were to remain bullish to see support and expect higher prices there, right? That doesn't mean I'm just trying to long until we see it fail. You're using that knowledge to identify a turning point, right? So you know exactly what you're looking for in the market. Now, does this mean you have a 100% win rate? Of course not. And that goes back to what we were talking about earlier. Not freaking out after a loss. Having a max trade rule that protects you from doing damage to your confidence, your account, your psyche, feeling like you need to make it back right away or in one trading session, get out of that drawdown. We all know how that goes. The more trades you put on, just human nature naturally, the more emotional you're going to get, right? We can only make so many emotional decisions, especially when it comes to money, per day, right? That's why you have that max trade rule, because we've all been through it. We have those days where you're just putting on a trade, and in the moment you're so tunnel visioned in that you're convincing yourself you see these setups. And then after you're angry as hell, you come back a couple hours later to look at the markets, if you're reviewing, or you just open the charts and you look at the charts and you're like, what the hell was I even looking at? Why was I taking a long here over leverage, and then 2 minutes later I was in a short, and then 5 minutes later after that I was back in a long, and then a short, and then I added, and et cetera, et cetera, et cetera, right? Having that max trade rule is going to prevent you from all of those things. And what did I say at the very start of tonight's call? That's when you become a successful trader. That's when you become consistent, right? Less is more. Let the market come to you, okay? You guys know how to read price. You know which PD array should be high probability, right? We know what time windows we want to be looking for a specific type of price delivery, and just by extension, an entry for a trade, right? When it fits our criteria. Okay, so it's time and price. Time is my major advantage as a trader, and it should be your major advantage as a trader. Okay, going back to our discussion from this morning, those charts. There were 5 charts that we discussed. There were so many things and gems from those charts and pieces of each fractal of price that I deem valuable, that we broke down and dissected, right? And we could have went for triple the time because there's so much to take away. And it's not to overcomplicate things, but it's just to dig into the algorithm technically, and then also put yourself back in those situations and say, okay, it's easier to see in hindsight, but how would I have felt when this came back against me, when it was almost at my target? Or how would I have felt when right away I had 7 points of drawdown before it reversed? All these things. Okay, but when we were looking at those examples, there was only 5 examples that we went through. And what did I mention earlier? Those were the only setups that I deemed high quality setups the entirety of last week. I have my max trade per day rule as 2 trades, because I know as I continue, as I mentioned, to go 3, 4, 5, 6, 7 trades, I'm more likely to convince myself I'm seeing something, right, and just do damage, right, and get it wrong. And you're just putting more risk on the table when you don't want to approach the market that way. Okay, but if you think about it, there's only so many high quality setups, the best of the best, A+, cream of the crop setups per day. Think about it, right? How many times do you look back at the market and say, oh yeah, banger setup here, another banger 100-point move here, great setup here, every single macro is playing out, even between macros. On the 1-minute chart, I could have bought every single order block and then I would have reversed here. No. You guys know that there's only, most of the time, 1 or 2, if 2 sometimes it's just only 1, great setups per trading day, right? And if you just use that simple math, there's only going to be, 5-ish, 5 or more, give or take, depending on the week, the profile, etc., of those setups that you can look at and that I look at and say, okay, here it is. This is what I want to engage with, right? And that's my skill set. But my real strength is doing nothing in between those times when those setups come to me, right? I have so many traders come to me and say, send me charts. Well, could I have entered on this inversion here, or entered on this order block, or this or that? Yeah, you could have, but you're looking for every reason known to man to try to get in the charts just because you're so eager, right? And it comes from a place of, for most people, I believe, of course, we're all in this to make money, but it comes from a place of passion and, motivation, right? But that doesn't mean pushing the button is progress, just to push the button, right? And that's the thing that we all face, and most of us, and I had to learn the hard way, right? Majority of the time, your decisions, and that's all we are as traders, are professional decision makers, right? Majority of the time, that decision is going to be, okay, it could do this, but it's not my model. It's not as clean as I want it to be. I could care less if it goes to this hypothetical trade that I'm unsure of, that I'm less sure of than when it is A++ setups. Okay, so my superpower and your superpower is going to be sitting on your hands and remaining patient in between those times when you personally are looking at a chart and saying, okay, I think it's going to do this, but I could also see the other direction, right? And then your job is just to reflect and, in our server, just ask questions, send your thoughts, look at other traders' thoughts, right? And that's how you get better on your skill set, 1% every day. And you're more likely to see it as time goes on while the candles are printing live, right? And you're not only going to see it, but you're going to feel confident in executing it and holding it to whatever target you're looking for price to deliver to. Okay. But your expectations, going back to what I was mentioning in terms of, how many high quality setups are truly there per trading week, your expectations, a lot of you, and what helped me substantially was reducing those expectations, right? You could take, literally, think about it this way. If you wait for you only allow yourself to trade one time this week, you're not going to waste it on a shitty setup. You're going to wait for the best of the best, clearest setup, macro SMT, relative equal highs to target, just short of a session high, right? Multiple buy-side liquidity pools to target, clear manipulation below macro opening price. You see that SMT, high probability order block inversion, the ways that we engage price. You see the best of the best setups, okay? If you do that and take that trade, of course, by extension of, the assumption that it's a great high quality trade, majority of the time that trade will play out. And even if you just take that one winning trade per week, you're profitable, right? Opposed to you trying to trade every single fluctuation in price, right? Just to be break even. And it's just so mentally taxing, right? I can't tell you the amount of times I look at the charts and I'm like, yeah, this is probably going to do this. And in my analysis, it's correct. Or, especially often coming into 9:30's open, that's when I trade New York AM session and then PM session sometime. But really the AM session is where I focus on. But I can't tell you the amount of times I'm doing my pre-market analysis with the group and we're going through identifying key liquidity pools, key opening prices, everything that we do ahead of a trading session. And I'm looking at charts and I'm saying, okay, it's clear as day, it's going to go to buy side here. It couldn't be clearer. But then right at 9:30, it just rips up there with no entry, right? Sometimes that happens. And if I understand that sometimes that happens, why would I freak out and try to chase when my entry criteria is not there, just because I've identified a liquidity pool that I think it's going to go to? So you can have your analysis, you can have your high probability liquidity pools and what you think price should do for a potential move with opening range, the entire daily candle, if you're bullish or bearish, the weekly candle, whatever. But you still have to find those time windows and those moments and those fractals in price where you say, boom, this is it. This is the model coming to me, not me coming into the market and saying, I'm pushing, right? You're allowing it to come to you because you know what you're looking for. And when you get to that point, at first it's going to be a struggle when you're so used to over trading and trading a million times, right? At first it's going to be a real struggle for you, but you need to embrace that struggle and that discomfort and remember conversations like these and remember perspectives like these, right? There's only so many high quality setups per day and per week, right? My best weeks, I'm taking 3 to 5 great trades per week, right? So usually and often I don't trade every day, right? And there's times I'll be, it's in the AM session and there's nothing clear to me, I'm not trading. And because this is the luxury of knowing that another opportunity is going to come at some point when I'm in front of the charts, I can either say, okay, yeah, I feel like sitting in front of the charts in the PM session and waiting to see if there's an opportunity and then execute on that opportunity. Or I can just say, okay, this is the beauty of trading. I'm going to go do something else with my life, get off the charts. I'll review if anything clean happen in the PM session, it'll just reinforce my methodology, my confidence, and my ability to read my skill set. I'm not going to say, oh no, I missed it. Damn, I knew I should have stayed. You need to avoid all of that logic, right? You know that at some point this week, just like every other week, at some point this week, there's going to be that setup. That's clear as day. You just have to wait for it, right? And it's not to instill fear of executing trades by any means, but it's to emphasize the fact that if your model is not apparent, if there's no clear draw on liquidity, you don't do anything, right? And I know I sound like a broken record here and often in Discord, but I can't stress it enough. That's what gets you to that next level, above that next hump that most traders are dealing with, right? After you can identify whatever model, even if it's not macro power of 3, right? If you're using freaking supply and demand, whatever it is, right? If you have your system, you still need to be able to control yourself in between those time periods where it's not apparent and not evident in the marketplace. And that's when you make your money. That's when you build your confidence. That's when you have iron discipline, unbreakable self-management, and you trust yourself coming into a session, right? I'm sure a lot of you guys sitting here now, and again, I say this because I went through all of this stuff, and the majority of us do it to different degrees, but I had a lot of problems with these self-management things because, just modern day technology, it's so easy to get in and out of a trade. You can do it in a half a second, right? But you need to know coming into a trading day and trust yourself saying, I know that I've matured enough in my trading journey and just as a trader that I know I'm not going to overtrade today. I know that my mindset, my self-discipline, my self-mastery is at a point where I trust myself that I'm not going to go on tilt if and when that inevitable loss comes, no matter how great the setup comes. Or if you slip up and, you find yourself taking an impulsive trade, you own it, right? You acknowledge and say, yep, I was in that trade. I know I shouldn't have been in there, but now I'm acknowledging that mistake, and I'm not going to let it put me on tilt and affect my next trade or next series of trade, or I'm not going to let this one little mistake ruin me, right? And that's when you have maturity and you grow as a trader, right? It's not learning about every single new PD array or every single new method or OTE or any of these things, or okay, I'm on the 1 minute chart, now I'm going to switch to the 7 minute chart because it's Enigma, or now I'm going to switch to turtle soup or any of these stuff, right? It's just about recognizing, in my personal opinion, macro power of 3, being able to identify that high probability trade setup and not do anything in between, right? So as you go into this week, we want to have a successful week, but really it starts day by day, decision by decision, right? We can't have a successful week unless we have a successful day Monday, and then you wake up and do it again, and then you wake up and don't go on tilt again Wednesday, and you don't go on tilt again Thursday, right? Every day you got to reset, and you have to be hyper aware of where you are mentally and remind yourself, okay, I'm sure we all know how easy it is to go on tilt or to overtrade or to feel so sucked in by the market, right? Where we lose sight of, remaining objective, right? And we get emotional about our decisions, and we're just focused on the money, trying to grow our account or get out a drawdown for that day or last week when you did the same old thing, right? You're stuck in that cycle. This week, have a max trade rule, plain and simple. And if you don't know, just start with 2 trades. That's what I do. That's what helped me, right? And at first I did the same thing. Okay, my max trade rule is 5 trades per day. That gives me room to try to get out of drawdown if my first 2-3 trades are losses. I can just over leverage on my 4th and 5th trade and try to get it back. No. If you're a man or woman of your word and you only have 2 max trade per day rule, you're not going to waste one of those bullets per se, one of those trades that you're allowing yourself to take on a low quality setup, right? Because you're going to be saying to yourself, okay, I'm only allowed 2 trades. I'm not going to waste it on this setup where I'm not sure what it's going to do, right? And that in and of itself is easier said than done, saying, yeah, I have a max trade per day rule, but then you still have to respect it when it gets hit, whether it was 2 wins or 2 losses, right? Because that's there to protect you. Even if you're coming off 2 wins, how many of you guys feel like you're a trading god and just continue to push, right? And try to double, triple that account. And then all of a sudden you're digging into your profits, or God forbid, you're in drawdown. You lost all those profits from that session, right? And all these things happen. Again, they happen to me. That's how I matured as a trader, acknowledging them and having these specific rules to prevent myself from going on tilt with my self-management, but also technically only executing in those macro windows, or situational. A couple times the actual entry will be a couple minutes after the macro window. We discussed that recently in the streams, but we're focused on the macro manipulation and what occurs, right? But the point is, you have these specific time windows that you're not just immediately getting into a trade, right? You're understanding, okay, it's time to really focus and see if there's a setup. And when that setup comes, that makes sense. That's when you go to work. And that's when you're confident, right? So again, we all deal with the same thing as traders, the same struggles, right? And it's so interesting just how the human mind works. The setup can look clear as day, right? Clear as day. SMT during a macro, stick with that same example from earlier I discussed. Clean highs, high probability order block, right? It looks clean as day. But once you push that button, you can't think straight. You're watching your profit go up and down, and you're thinking about the last 5, 10, 20 times, the last 2, 3, 4 weeks that you've been on tilt and stuck in a cycle because you've just been stuck taking low probability trades with no logic. So you have that mental scar tissue, right? That's messing with your minds. So when the high probability setup actually comes, you're not going to be in the right state of mind, and you're not going to be confident after you're taking setups with no logic, when your system or your model or your favorite PD rate isn't there, right? So this week, really prioritize time. As I said in the beginning, and as I say often, we can have insanely precise entries, insanely precise ideas of where price is going to go and when. We can have, and we saw multiple times last week, exactly when we say, okay, we expect speed now, and it rips there as it's coming off your freaking tongue, right? But once you put that trade on, you need to trust yourself, right? And how do you trust yourself if you know that every trade you put on, no matter how great it looks, it could be a loss? How do you reduce your emotions? You don't over leverage, right? So if you're having these issues feeling emotional in a trade, you want to reduce your leverage in half this week. Even if you're already trading 0.5%, typically reduce it to 0.25%, right? Because that is going to put your focus naturally on the skill set and price, and it's going to make you less emotional. And that's what you want to be. And as you get those base hits using lower leverage, base hit, lower leverage, base hit, lower leverage, then you can slowly start to scale up as you gain confidence in your ability, in your skill set, which is reading price delivery, right? And having these rules, not being over leveraged in a specific amount of times that you trade per day, and those specific time windows, you know what you're looking for. You're trusting yourself and your self-management to not go on tilt. You're understanding that an opportunity will come, but it doesn't have to right now. It doesn't have to in the next macro. It could just chop around the entire day, and I'll remain patient until my model is present tomorrow or 2 days from now. But I know at some point, I'm not going to be scared when I am called to execute, when it is macro power of 3 and it's showing me what it wants to do, right? So my superpower in my trading is extreme discipline and extreme patience. And everyone says in trading, don't be greedy. Yeah, don't be greedy when price hits your target, right? When you're holding a winning trade, but be greedy in terms of the criteria that you demand for entry setup, right? Be greedy in that regard. Demand the market to show you so clearly what it wants to do. Clear draw on liquidity, clear manipulation, time and price aligning. Okay. And if you focus on the things that we discussed in this call, you're going to be in a very good place, not only this week, but if that is your, trading skill set as you progress. And just naturally, the more time you spend in front of your charts, just throughout your trading career, right? You're going to grow in terms of your technical skill set. You're going to be able to identify, okay, this looks like a condition, a session that I should really be looking to get involved in, or I really should be patient and, maybe wait till the PM session, whatever that particular situation is for that day, right? You're going to have those tricks, right, to be able to see those more advanced scenarios, right, where you want to be involved, you don't want to be involved, you should only be taking conservative targets, or you should expect a larger price run in terms of handles. All those little things are going to come with time. But as you gain confidence in your ability, your framework, your first priority should be those things. Max trade rule. Don't over leverage. Focus on the time windows. Macros, macros, macros. I'm telling you. Okay. Again, I see a lot of you guys in here that I see often in Discord or just on Twitter or wherever. And thank you guys for coming. I appreciate it. I hope you guys are enjoying this. I forgot what I was going to say. But yeah, okay, this is what I was going to say. As we have that 9:30 open come into play, right? Let everyone else do the guesswork in that opening range. Yes, there's going to be times where if you're looking at price, it looks like a good setup and it runs. But what do you understand and what is your priority and what should be your perspective on the opening range? Those setups are lower probability. That doesn't mean they're never going to play out. But trading is a game of probabilities, and you want to have as many things on your side as possible. So why, as you're growing, would you want to rush in right away before the 950 macro? Okay, and within the Discord, we've been talking about the opening range filter a lot. So the opening range, I'm sure most of you know, that's 9:30 to 10 a.m. Eastern time. Okay, just in terms of that time window. If there is 10 a.m. red folder news, don't trade until after that news release. Why? Because I know that it's more likely to chop around or give me price delivery that I don't want to be a part of or be seek and destroy ahead of that. Again, that doesn't mean it's impossible to have a good trade or a winning trade before that news event, but I'm putting everything as much as I can on my side. On days when there is no red folder news, that opening range filter is reduced 10 minutes. And the rule is 9:30 to 9:50. That's your opening range filter. No trades until that first macro. But once we enter that 9:50 to 10:10 macro window, then you can start to hunt. Of course, you still have to wait for the setup, right? But just in terms of your framework, what you're quote unquote allowed to do, that should be your perspective. Because technically, you're not only understanding that, the significance of time with the macro windows, right? And that things can get a little funky in the opening range before that 950 macro. But you as a trader, you're implementing, especially on a Monday, tomorrow, you're implementing patience and stressing discipline to start the week. And that is your superpower as a trader. Okay? So time and price. Time, right? If you go back, some of the examples we talked about today, I believe it was, that absolute beauty. It was my setup of the week I was talking about this morning. Friday's 1050 macro, NASDAQ long, just the best setup of the week. I posted on my Twitter, I think, actually. I'll retweet it after this, but just an absolute beauty of a setup. And if you look at that consolidation ahead of the 1050 macro window, what are they doing? They're chopping it around in a very tight range with equal highs and equal lows right below. And let all the other traders do the guesswork ahead of that. Your advantage is that you understand the significance of time. Those traders getting stuck in that chop ahead of the macro don't understand the significance, right? I recall right now in my head, there's one BISI that was formed ahead of that 1050 macro, right? It was such a tight range. If you look at it, again, I think it's on my Twitter, I'll retweet it, but if you look at that fractal of price in the 1 minute chart, NQZ 2024, ahead of the 10:50 a.m. macro from this past Friday, you'll see the BISI that stands out the most. And if you look at that setup and you're just understanding price, you'll see a swing low swept. You'll see that displacement that BISI formed through a swing high or a set of swing highs, and that fair value gap does get formed. And if you only have knowledge of price, you're going to say what? You're going to say that's the silver bullet. you're going to say, well, we had the relative equal lows, the high of day falling the relative equal high of day falling just short of Thursday's lunch high. You're going to say clear draw on liquidity, clear setup, silver bullet, displacement. We're finally breaking out of the range. And then you take a loss. Price comes right below it. That's avoidable because you understand time. So even if that setup was to pan out and was to rip up to the highs, I know that it's a lower probability setup. Again, not an impossible setup, but a lower probability. And that's all trading is, right? And if you refer to that same BISI, and again, you're just a price pattern trader, you're going to see price close below that BISI. And then you're going to say, oh, it failed. We ran the high actually. I'm going to change my bias, use it as a bearish inversion. I should target low a day now, the opening range low. And all the lows that were above that opening range low. Engineered sell side. It's clearly bearish. No. It's just frustrating traders building a range, building liquidity on both sides ahead of the 1050 macro. Okay? I cannot tell you. Now I'm in flow state right now. I should have just done this on YouTube and had the charts. We'll do some live streams on YouTube and some reviews and stuff this week. And of course in Discord as well. But man, once I started to reprice this way, and again, God bless ICT. He's the one that blessed the community with all these PD arrays. But there's so many ways to engage with price and so many PD arrays to focus on, especially when you're on the 1 minute chart where it can feel so overwhelming. And you can say, okay, I've been doing my studying. I can identify this order block. I see it, right? I see the fair value gap. How come it keeps failing? I don't understand. And it's because of time. Time, macro. You're going to save yourself so many headaches, so much stress being in trades when it's not delivering cleanly, right? Even if it eventually chops around and goes to your target, you're going to get the quickest, best of the best setups, and you're going to know you're on side more often than not shortly after you enter when you're using the macro power of 3 entries. And again, if you guys don't know what I'm referring to when I say macro power of 3, just go to my YouTube and type in macro power of 3, Real Trader Tim, and a video will pop up. Okay, and you'll see the framework, right? But essentially, it's just a refinement of the logic when we are discussing key opening prices. So if we're bullish, where do we want to see that manipulation occur for the weekly candle in relation to Sunday's opening price? Below Sunday open, right? Same thing. You're just refining it down to that next key opening price. If we're bullish for that daily candle, where do we want to see price go below while the manipulation is taking place? Below midnight open. For the intraday session, where do we want to see it go below for the intraday move if we're bullish? Below 9:30 opening price to manipulate and run old lows first. And then you just refine it again for those macro windows, macro opening price. So every macro, you should be marking out what is the 950 macro opening price. At least acknowledge it. If not, just draw a little faint line, not to clutter your charts, but draw a little faint line and you'll see how price reacts. Now, it's not every macro you're going to get beautiful macro power of 3. And that's your superpower, as I've been saying this whole time, your patience. So you understand what you want to see during a macro. You understand the significance, but you know what you want to see. And if you don't see that, you still do nothing. But when you do see it, you execute without fear, without hesitation. And you have the confidence and you're rewarded for your patience. And you're going to see your win rate go through the roof. And you're going to feel confident. And again, you're going to, once you have that one time, I'm telling you, when you have that one time where you're sitting through delivery that's not clear to you, you're waiting for time and price, and you're implementing patience. After you've been struggling with that patience and your discipline and over trading, when you finally embrace that discomfort and sit through that, A, and then B, you put the setup on and you're rewarded for that patience. And then C, lastly, you hold it to your target and it plays out exactly as you thought. All you need are those 3 things that I just described to happen once, and it changes your life. It changes your trading career and your perspective as a trader. Because what did you just prove to yourself in that scenario? You come into a trading day and you know you trust yourself to remain patient. Number 2, you come into a trading day and you know that after you're patient through low probability conditions, you know that when it is time to go and it's time to play, you can turn it on and enter a trade without fear. And C, you know that you're confident and you trust your skill set, your experience, all the time you've put into these charts, you trust that when you put the trade on to hold to your target, and you don't get emotional and you don't freak out. You recognize those emotions. You say, yeah, this is difficult, but I'm going to hold it. And you know that that's the only way that you can get better. That's the only way that you improve. And after you accomplish those three things in that scenario, a whole new door opens to you. You're not going to be rushing into trades. You're going to be letting the market come to you. It's like you're standing next to a river and you're waiting for a piece of gold to go by. And it's just rock after rock after rock after rock. And you're not taking the bait. And everyone else is trying to reach in and falling in when they try to grab the rock. And then the gold comes right up to your feet and you pick it up, grab it, and it's yours. And that's it. Right? And that is how I want you guys to look at the market. I don't want you guys to be little dopamine rats trying to come into the market, pushing the button to feel good. And then when you take that loss because you were in a trade with zero logic, right? Just because the market was moving around, you just get in right away or reverse your bias, or you're trying to make it back right away. It's unprofessional and it's immature, right? And if you remind yourself of those things, before trading day, if you're feeling impulsive, right, remind yourself of those things. And remember, it's normal to feel impulsive. It's normal to feel nervous when you're in a trade. Even sometimes when I see, the best of the best setups with macro power 3, I'll put it on and, I'll feel some of the things I used to feel more. I'll feel like early on in my trading journey, I couldn't hold to my final target. It would go halfway there and I'll be so terrified it was going to come against me and stop me out that I would always panic sell, and then it would run right to my target. My analysis was spot on, but I couldn't hold it mentally. I couldn't do it. But once I did that first time, like I said, it opens a whole new door to me, and it will to you. Right? But even now, if I identify a high quality setup, sometimes it's like, halfway there or 75% of the way there, or whatever the scenario is, and I'll feel that itch to, okay, well, maybe I should just panic sell. Maybe I should just trail stop super tight and hope it just rips up from here with no logic, right? And you just simply remind yourself and say, no, I've done this a million times, right? I can't tell you the amount of times I speak to myself when I trade, or I write it down, and it helps you literally. That one sentence that you write it down, just saying, relax, you've done this before, or patience, or write down or ask yourself, has anything changed in terms of price? If not, there's nothing to do, right? And something with this in terms of trailing your stop loss, right? What scenario were we talking about earlier? What day was it? What was that high probability order block? It wasn't Friday. I forget what day it was, but I guess we'll just build an example, right? If we get a sniper entry towards the low of the day, right, for a long, right, we snipe the bottom, high probability order block or whatever macro PD array we're utilizing for that particular scenario, right? If we have a great entry and, it's a substantial price run to where we think price is likely to go in terms of the draw and liquidity, it's just natural. You have to sit through time, and you have to sit through fluctuations in price, especially when you're on that 1 minute chart. There's going to be quick fluctuations that look like it's going to dump to, to zero against you. And you just need to ask yourself, has anything changed? No. So if you're in that long scenario, and this is important, and I hope you guys are to some degree taking notes or something, right? Because these things help me out all substantially, whether it's some of the technical stuff or, in my opinion, more importantly, the psychological stuff and building your iron mind per se, right? But if you have that scenario and you're entering a long, you're just looking at that sell side leg before your long setup or entry was provided, right? Let's imagine it's an order block. You're looking at that order block, your entry, the opening price of that bullish order block, and then you're looking at your target, your draw on liquidity, where you think price is going to go. And then you're looking at that sell side leg while price was going lower, and you're saying, okay, what needs to be closed above? What's in the way of my entry and my target? The bodies tell the story. You don't do anything, you don't trail your stop loss until price closes above one of those premium PD arrays from that sell side leg. Okay? So there's logic behind when you should trail stop or move to break even or start to trail up. There's logic behind it. It's not out of fear. It's not fear-based. Okay, and then, with that scenario, if you're looking at what needs to be closed above, many times it's going to be that 930 fair value gap, or the new week opening gap, or the news fair value gap, right? Or a SIBI that was utilized by the algorithm on the sell side of the curve to send us lower, aka hint, hint, that's its initial state of delivery. Hint, hint, once we close above, it should be support. More so than just a normal SIBI that was not delivered to on the way down. Really study what PD arrays and more specifically what fair value gaps were utilized while we were going lower. Okay. And then it's plain and simple. You just say, okay, I see how it was used to send us lower. If we are in a state of buy side delivery now and we're on the buy side of the curve, what do we need to see? A body close above that. It's simple. Don't overcomplicate the change in state of delivery, right? Because remember, you're a patient trader. So you have all the time in the world to look back and say, okay, I've identified a draw on liquidity first and foremost. Now you've identified a manipulation, aka if you're bullish, a run on old lows, and you've identified a turning point during the macro, right? And then you're looking for a closure above one of those significant inefficiencies / roadblocks, as you know, I refer to them within RTO. And I'm telling you guys, once you start to look at price this way, it's going, I know it sounds cliche, but it's literally going to change your lives more than you guys can fathom. It's going to take you to a place in your trading that you're so confident that you literally care less, right? I love trading. I could literally take off the next 2 weeks and not feel FOMO, but I love trading and I know that I can identify opportunities, right? And you really want to get to that spot, right? And again, this does not by any means, this conversation, this does not mean that I never take losing trades or that I'm some trading god. I'm not implementing that perspective by any means, right? But it's to inspire because I've been there. I've been at the lowest of the lows when, you know, you're staying in on a Friday, Saturday night, you know, an entire month, right? And you don't have any trading friends. You have no one to talk to that you trade with or anything. And everyone's out clubbing, or out with the girl or whatever, right? And you're in there putting in the work and you don't have the results yet. And I'm telling you, do not give up. Just keep going. And at some point, if you review the things that I said in this Twitter space and really think about them, not just listen to the words, really think, you know, pause some of this stuff, reflect, contemplate on some of the perspectives I discussed technically and psychologically here. The importance of time, everything we discussed. It's going to take you further than you can imagine. You're going to get to a point in your trading where you know you're going to show up tomorrow and say, oh yeah, I know I'm going to be profitable today. I know this is going to be a green week. I know it is. I know I'm not over leveraging. I know I'm not over trading. I know there's no need to over leverage or over trade because there's so many great opportunities that I know how to reprice because I'm so confident in myself. You're going to get to that point, but you have to go through all the discomfort first. You have to go through making the mistakes because you won't value how good it feels after you get to this level, right? And you know, humans, we all just have to, I don't know why, we just have to learn the hard way about stuff, everything. You know, so if you're going through that right now, I know it's not fun. I know no one wants to take a loss. All this stuff, you know, I still don't want to take a losing trade. It's not fun. No one wants to, right? But it's about how you respond after a loss. It's about saying, yep, it happened. Thank God I wasn't over leveraged. Thank God I trust myself and I know I'm not going to go on tilt right now. And I have patience and I have the strength to sit in this loss until the next opportunity presents itself, which could be the next macro, or it could be a day from now or 2 days from now. And that's your perspective. So that patience, that discipline, right? That is your strength as a trader. That's how you're going to find your way in this industry and make a name for yourself and find your success and feel proud of yourself. When you come into the market and you're following clear logic and you're not just coming in and saying, all right, let's see what happens today. Hopefully I survive today. Maybe I'll pass my funded. Let's just put on the max amount of contracts they allow me to do. 15 contracts, all I need is whatever. I only need 8 points to hit it, 10 points, whatever it is, right? You're not going to be coming into the market in that regard, right? You're going to know exactly what the market's going to give you. In that same analogy with the river earlier, I don't know where that came from. It just came off the top of my head, but you know, Think about it that way. You know, all these candlesticks are just low probability bait, right? Okay, there's another one that could work, but I don't care. Could work, I don't care. Could work, I don't care. Could work, I don't care. Boom, there it is. Mine. Give me that. Confident, hold to target. Boom, done. Don't get greedy. Lock it in. Pay the trader. Done. Done for the day. Come back tomorrow. See if there's an opportunity. If there isn't, we wait till the day after that. Okay. And I'm sure you guys can see now, this is my first Twitter space, but I'm sure you guys can see, you know, I could just ramble on about this stuff, but it's so beneficial. And these things psychologically are the most crucial things that are stopping you from being a consistent, successful, profitable trader, right? So I can show you how I engage with price. I can show you when it should be a high probability order block, but I can't not push the button for you in between those opportunities. That's you. So you have to take ownership and say, I'm only taking high quality, clear macro power 3 setups. That's my strength. And I'm going to prove to myself that I trust myself in my ability to remain patient until it's clear. And that's when you become profitable. So if you guys enjoyed this, let me know. We'll reply below. I think it should save this Twitter space. I hope it does. A lot of things of value in here. If you guys have any questions, just give me a ping here on Twitter, or I don't know, DM me or message me in Discord or wherever, and I'll be glad to get back to you. We'll start doing these more regularly. Maybe we'll do it every Sunday. If you guys want to do that before the week, I can talk about some review of the previous week, kind of like I did throughout this call, talking about fractals of price from last week and potential scenarios that we found ourselves in from the previous week, as well as, of course, talking about how we can have a successful week for the upcoming trading week. So maybe I'll start doing that every Sunday night, kind of like we did here, especially after, you know, we just get 6 p.m. market open. I'm curious to go check out the charts, see if there's a new week opening gap. Just a little note on that as well. If you were in the weekly prep earlier, I'm pretty neutral on indices to start the week. I don't have any hard bias. Tomorrow's a Monday with red folder news. I will be at the charts, but my expectations right away are lowered because of that economic profile. But if you recall that 15-minute chart we were looking at from earlier today, there was just, especially on NASDAQ, a lot of equal lows and a lot of equal highs above. So we really don't want to push too hard until we have a clear picture. And of course, as you know, I've mentioned a bunch of times here, we don't want to enter a trade or marry a bias when we have clear liquidity on both sides. Okay, so implement patience to start the week. Implement your discipline, and that's your superpower. And that's where, you know, your money's going to be made. Every time you say no to a low probability setup, think about that as a winning trade. So I'll leave you with that, and I will talk with everyone soon.